Global energy markets are in a death spiral as the Strait of Hormuz effectively shuts down. Since the conflict began, shipping traffic has plummeted by a staggering 95%. What was once a corridor for 3,000 vessels is now reduced to a mere trickle of 150. Oil prices have now ignited to $115 a barrel following U.S. plans for an extended blockade. Inside Iran, inflation has crossed 53%, leaving millions jobless.
Breaking tonight. Major international developments shaping the world right now. Welcome to Pacify News. I'm your host, bringing you the most important global stories and what they mean for the United States and the world. From geopolitics to global economy and emerging technology, we deliver facts, perspective, and real impact. Stay with us as we dive into tonight's top stories. Let's get started.
Stay informed on the global crisis. Subscribe to Pacify for the latest updates. Don't miss out.
The reshaping of global supply chains. As the conflict in Iran enters its 9th week with no resolution in sight, the maritime landscape of the Persian Gulf and the Strait of Hormuz has been fundamentally transformed. This disruption has sent shockwaves through global markets, severely impacting the supply chains for crude oil, natural gas, fertilizer, and other critical commodities. Before the escalation of military actions by the United States and Israel in late February, the Strait was a bustling artery of global commerce. Data from Lloyd's List Intelligence indicates that approximately 3,000 vessels transited the waterway monthly. Oil tankers alone carried an estimated 15 million barrels per day, accounting for nearly 20% of the world's total oil trade. However, according to Kepler, traffic has now withered to a mere trickle, with only 154 crossings recorded in March. Maritime experts describe this collapse as both rapid and unprecedented, a stranded fleet and regional shifts. Currently, traffic through Hormuz is operating at just 5% of its pre-war average. This has triggered acute shortages of refined products, particularly across Asia. While the disruption is massive, the Gulf is not entirely empty. Experts note that while over 800 vessels remain in the region, they are not necessarily stranded. Instead, local and Iranian operators continue to navigate regional routes, while international shipping giants choose to avoid the area entirely to mitigate risk, reallocating their fleets to safer global waters, the new choke point and geopolitical control. The Strait, measuring only 24 miles at its narrowest point, has become a strategic tool for Iran. Following a short-lived ceasefire agreement on April 8th, hopes for safe passage were quickly dashed. The Islamic Revolutionary Guard Corps, or IRGC, halted traffic again, citing ceasefire violations in Lebanon. In a bold move to exert control, the IRGC has designated new alternative transit routes that force ships through Iranian territorial waters and past Larak Island. This allows the Iranian Navy and port authorities to conduct mandatory checks and collect transit fees. Simultaneously, the original international shipping corridors have been declared.
The surge in global energy prices. Oil prices have surged to a one-month high following reports that the United States is preparing for an extended blockade of Iran. On Wednesday, Brent crude jumped to approximately $115 per barrel, up from Tuesday's close of $110. This sudden spike follows a report from the Wall Street Journal stating that President Donald Trump has instructed aides to intensify the ongoing maritime blockade. The move is a strategic effort to squeeze the Iranian economy and force Tehran into a diplomatic settlement. The standoff in the Strait. In response to the tightening U.S. grip, Iran has reiterated its vow to disrupt all traffic passing through the Strait of Hormuz. This vital choke point, which typically facilitates 20% of the world's oil and liquid natural gas supply, has remained effectively paralyzed for weeks. While Tehran warned that any vessel approaching the strait would be targeted, U.S. forces continue to intercept or turn back ships attempting to reach Iranian ports. Despite this, BBC Verify has tracked at least 4 vessels that appear to have successfully crossed the U.S. blockade line in recent days. Iran's deepening economic crisis. The human and economic cost within Iran is becoming catastrophic. According to the Statistical Center of Iran, the annual inflation rate has skyrocketed to 53.7%. The national currency continues to plummet, and the government recently admitted that nearly 2 million Iranians have lost their jobs as a direct or indirect result of the war. On Wednesday, President Trump took to Truth Social to urge Iran to get smart soon and sign a deal, claiming the country couldn't get its act together amid the ongoing deadlock. Global market reactions and forecasts. The news has sent ripples through global financial markets. European stocks retreated on Wednesday, with the FTSE 100 falling 0.73% and the Pan-European Stocks Index dropping 0.4%. Investors are increasingly skeptical of a quick resolution. The World Bank issued a grim forecast on Tuesday, warning that if the conflict and supply disruptions persist through May, global energy prices could surge by 24% in 2026.